Good morning, gang. Welcome to this week's YouTube update. First and foremost, remember, nothing I discussed today is financial advice. Always seek advice of a professional before investing, yada yada yada. You know the score, gang. Right, so what's happening? Well, we're having another bullish day. I've had a couple of bullish days in a row now. And judging by the state of crypto Twitter right now, you'd think we'll back up at all-time highs. So the main question is, and one thing that we're going to answer today is now the time to start getting mega bullish, looking for new all-time highs, or is now the time to start being cautious? Well, let's talk about a few things. So, first and foremost, the monthly, we're still in a downtrend. Just to point out the obvious, we're creating 2 green months in a row, or in my case white, and we did the same thing back here. So does that mean that this is going to be a repetition of this? Who knows? We'll have to wait and see, won't we? But for now, we're still in a downtrend. So obviously, we're creating lows, lower highs, lower lows, and is this going to be a lower high for another continuation down? Let's wait and see. Weekly, exactly the same structure. No change. We're still in a downtrend. Now, the only thing that's starting to show signs of life is the daily. And as we can see, we are still making high highs and high lows. And last night's close finally closed above this level, which is like roughly around 23,800. So it's something to be aware of, but it wasn't a convincing close above it, in my opinion. If we'd have blasted straight through on yesterday's daily close, then I'd have been a bit more convinced. So I'm still cautious. I'm not saying I'm bearish, I'm not saying I'm bullish, because I always sit on the fence, and 9 times out of 10 I'm hedged in this market. So quite frankly, I don't care if price goes up or price goes down. One thing to note, and we've been pointing this out on the channel for far too long now, that we're still in this downwards parallel sloping channel. And as I've said time and time again, until we get out of this channel, there's no reason to start looking macro bullish yet. There's still a hell of a lot of resistance in this area that price has to get past before we can start talking about new all-time highs. You know, if you look at the state of the economy, I'm no macro economy expert or anything along those lines, but you know, look at the state of the economy. It's not great. It's not great. Could it be getting better? It could be. You know, yesterday's CPI figures were a little bit better, but again, it's still not great. We're still feeling the pinch. But again, that's not how I trade. I'm trading purely what I see in the charts, but it's something that you should be aware of. So right now, again, like we've said a fair few times on this channel, what we're talking about is resistance that we need to be aware of. Well, quite simply, the main resistance on the chart right now is still coming in around 29k, which is this value area low. If price can get back into this value area and potentially break out of this channel back into this value area, then we're then starting to play this range, which then first and foremost we'll be playing this range. If we can clear this range, then we're back into this range. Now this range cap is capped by the macro point of control. Now this is on Bybit, by the way. This is not the same on all exchanges, but it's something to be aware of. This point of control, it's a significant level of resistance. And chances are, once we've left this area for so long like we have, the first time we get back to this area, chances are we could see a reaction here. It's something that we do teach in the Discord, is this, about how to trade point of controls. So that's that. Now, is there any levels of resistance between here and here that we need to be aware of? Well, there are. So let's talk about those now. So let's get rid of the fixed range. Let's leave the channel on for now and let's zoom in. So, as you guys are aware, we've been in this sideways range now quite some time. Initially, we were looking at this as our range. This is how we were first drawing it, and this range played out beautifully. Obviously, we've got the lows, which this is when we knew. High, we've got reactions around the EQ. Good reaction at the high, back down around the EQ, and funnily enough, it lines up nicely with this downward sloping channel. Back up into the high, first reaction, and then we deviated out, back in, deviated back in, deviated out, and now we're sitting on the outside of it. But now we've got a little bit more data. Can we change this range and alter it? Because, you know, trading is dynamic. We need to be dynamic. We need to change our thesis says we're moving along. So could we be looking at this as our macro range high? So we've got respect up at here, we've got respect at the EQ, and now this is starting to line up a lot better. So we couldn't break out here, we came back down, tested the EQ, we tried to break out again, everyone got overly excited here and started longing the breakout. Meanwhile, we were looking for shorts, we played it back down, and then now we came back up, another rejection, back down, and now yesterday still didn't close outside of it, but we did close above these levels here, and now we're starting to see potentially signs of a breakout. So what am I looking for here? Well, I said this on our post yesterday on Twitter. So there's a couple of options here. Either A, we swing fail these highs, so therefore we'll come up, swing fail, back in, and then move back down. You got a clear entry for a short there. That's option one, and it's something that we have been looking at already in the group this morning, because taking a look at the footprints, we can see that on the wick to the upside, if we zoom in here onto the 5-minute chart, we can see this wick here. Now, I'm not saying that this is a reversal wick, but I'm pointing out the obvious with this. So this is this wick here, and we can see on this wick here that the breakout traders are starting to get a little bit silly again, and they're chasing candles. Now, we say this time and time again, and I can't stress it enough. Don't chase candles. Because you see a moving candle, do not chase it. And look at this guy up here. You know, you've got a 1.3 million market long right at the top of this candle. You know, within this candle alone, the 7.2 million worth of market longs. So chasing the candle, and then all of a sudden what happens? Price breaks out, everyone thinks that we're going to the moon again, and then it reverses on you, and then these positions get closed out. And now we're waiting to see what happens. Could this come up and take the high again? Yes, it could. Could this then continue lower? Yes, it could. We don't know yet until it happens. But all I'm saying is, do not chase a candle. Because you see a bullish candle like this, when it's first coming up, start chasing it and then go market long. Because all you're doing is trying to chase it. And that's not going to work out well. You know, the times to get in were pullbacks. You know, this was a great example. And there are a fair few traders that caught this. So a great example. Short from the highs, we had a nice range here. We swung failed the local range, came down, came back in, we tested the EQ. In fact, we'll show you this. So this was something that we were looking at in the group at the time. So this was a great little trading range. So we came up, came back down. We've created the channel now. Came up, swing failure, back down to the lows, back up, couldn't get above, couldn't take out this high. There's your short for entry, trigger for a short entry. Came down, broke out of the range, came back up, tested the EQ, and then moved away. It was a great short trigger there. Again, while everyone else was bullish, we're looking for shorts, or we're looking to take profits on longs. It's as simple as that. And then we came back down, and then this would have been a perfect opportunity to get into a long. Take profits back at the range highs, leave a little bit to ride, and see if we do get the full-on breakout. So all I'm pointing out in this is, don't be this guy. Don't be this guy. It's not smart. It's not a wise strategy. It might work in an up-only market, but when you're in a sideways / bear market, it's not the smartest thing to do. Let's be honest. Control your emotions. Control your FOMO. Right, let's zoom back out again and let's carry on talking. Let's have a look. Right, so this is the options. So as we said, we take out this high here, which technically we have done on Bybit. I'm not too sure about other exchanges because I've not had a look yet. Come back down into the range. You've got an easy swing failure pattern there. Trapped a load of breakout traders, and we continue the move down. Now, that's one option. The other option that we've got is we have a naked point of control here, which is pretty much one of the only levels of resistance between this range and this range. Okay, so it's something to be aware of. Now, a naked point of control by itself is not the strongest of levels. Now, what we're looking for is we're looking for high probability setups. So how do we create a high probability setup? Well, we need to start using some other tools. So let's use our fib tool. And let's pull a fib from this swing high to this swing low. And look at that, we've got the golden pocket. So we've got a golden pocket sitting right over a naked point of control. And then in this instance, if we are looking at this, and this is looking at, roughly speaking, between the 12th and 13th of August. So if price got up here around the 12th and 13th of August, and we see this, and we see a nice clean reaction, a change in market structure, well, you've got a trigger for a short there, haven't you? And certainly, if you are long, then you're going to be taking profits, because this channel has held price down now ever since November 21. It's a lot of months. So it's coming up to a year. So this channel is very, very important. We should keep it on our chart. So there's another option. Now, your alternative is it does blast straight through this. We get no reaction here, and then we continue moving up. Well, where we're looking for? Well, quite simply, we're looking for these range lows here, aren't we? Which is the value area low of the overall upper range. If price gets a reaction there, then you'd be looking to trade that back down. If price doesn't get a reaction there and we get accepted into there, then all of a sudden you're trading this range. It's really simple. It's level to level. You're taking profits on longs at key levels of resistance. You're looking potentially to open shorts at the same time and hedge yourself. What if we got a pullback down here but it didn't take out these lows? Well, then we're looking for another lower high. A higher low. And then looking for a higher high. Lots of things can happen. This is why we need to play smart when we're in a range-bound environment / bear market. Okay? As we said last time, there are arguments to say that the low is in. There's a couple of Elliott wave counts that do signify that the low is in down here. But there's also other Elliott wave counts which says that we could go lower. So this, I said this last week, that to me this doesn't look like a bottoming structure yet. And anyone that's been around this space for quite a few years will know that this doesn't particularly look like a bottoming structure. It could be, and it could prove us all wrong. But right now I'm cautious. I'm still very cautious. Personally for me, if this is the bottom, I prefer to come down and test these lows again. Not saying we do it from here, we could do it from higher, but either way I would prefer to test these lows again, because that would look more like a bottoming structure. And if that doesn't happen and price goes up, fair enough. I'm still in a long from down here. Okay, but likewise, I'm still in a short from here, and I'm still in a short from here. So as I said right at the beginning of the video, I couldn't care less which way price goes. And this is how we play it. Okay, so that's what we've got to talk about today. So we've got to be aware of this level. We've got to be aware of a swing failure pattern here. And if somehow we do get past this and we get past this, then we're looking at this range here. Okay, whether it gets acceptance back into this or it doesn't get acceptance back into this. Either way, that's what we're looking at right now. If you guys want to keep up to date with some of my ideas that I post, along with all the other members, check out our free Discord. We've got links in the description below. We've got links on the website. If you do want to check out our website, it's easy to get into the Discord, into the free Discord. And if you do want to join us, then we do have a co-pilots area where it is a monthly subscription, but there's over 50 hours of educational content on there. And you also get access to the private Discord, where I post a lot more of my ideas, including high time frame swing setups. And that's it for this week. So let's not get too bullish. Let's not chase candles. If we're going to enter longs, we're going to enter them on pullbacks. If we're going to enter shorts, we want to see a clear reaction. Take profits at levels. And until next time, gang, see you, bye.